Hi guys, Joel Schneider here with Whissel Realty Group. Today, we're discussing all of the recent changes going on in homeowners insurance here in the beautiful state of California. If you're my neighbor here in San Diego County, I'm sure you've been hearing some of the news about the new landscape in the insurance world. If you've been looking to buy or sell a home in the Golden State, you're probably paying even closer attention. You might be wondering, so what exactly is going on in the homeowners insurance industry? Is my specific property affected? How could homeowners insurance put my sale or purchase at risk? How can I be prepared to mitigate its effects? Well, let's find out, shall we? Here's the quick backstory. Fire insurance, to hear insurance providers say it, is becoming a losing game here in Cali. The combination of inflation and restrictions limiting insurance companies from raising their rates has caused most major carriers to stop offering policies and/or refuse to renew policies that are already in place. It's at least caused them to redraw their map on what they consider a high fire severity zone. Spoiler, they're getting a little more heavy-handed with the red and orange highlighter. Know that many homes here in San Diego do fall outside of the geographical areas where these moratoriums are in place. And though rates in those areas are still expected to rise, the increase will not likely be as severe as those within those areas. Remember, everything gets more expensive, always, forever, except your mortgage for 30 years and then it goes away, real estate. To the homes that do lie in the provider's high fire severity zones, where they may not offer fire insurance, you do have an option. The California Fair Plan is a program put into place decades ago that gives people the option of fire coverage when there isn't an option in the open market. Historically, that has been a very small percentage of homes in the state, but today's insurance landscape is leading to more and more homes relying on this program for fire coverage. This insurance can be shockingly expensive and can potentially be a deal killer in your transaction. More on that in a second. So the Fair Plan covers fire. The remainder of your insurance, the factors not affected by fire, is covered by an insurance policy known as DIC, Difference in Condition. It rides alongside your Fair Plan fire insurance. In most cases, you'll be able to choose a DIC plan from one of your preferred insurers. If you plan to buy or sell a home in a high fire severity zone, it's super important that you take the right measures at the right time to ensure you don't get burned by fire insurance during the transaction. Okay, Joel, what do I do as a home seller? Step 1, set your expectations. Just because you may be grandfathered into a more traditional coverage, it's not safe to assume that your buyer will enjoy the same premium or that your home is immune from the recent moratorium these insurers have put into place. Also, note that it could extend your close of escrow. The backlog of applications for the Fair Plan varies from week to week, but the timeframes are anywhere from 5 days to 5 weeks. Step 2, if you're curious or concerned that your home or prospective home may require the Fair Plan, reach out to me and I'll get you an answer, and I can even get you a quote if you'd like. Step 3 is the most important to your success here. It's simple, it's easy, yet sadly, if you're already working with an agent, you're probably going to have to advise them to do it because you're the expert now, right? Step 3 is before accepting your best offer, turning away other offers, and opening escrow with your buyer. Make sure the buyer and the real estate team has confirmed a Fair Plan quote and is completely comfortable with their real monthly expenses. Working with Whissel Realty, I've taken a proactive approach to this concern with my buyers and sellers from the onset of the moratorium, but out in the market, I'm hearing a lot of stories of escrows falling through because insurance became a meaningful monthly expense for the buyers and their agent and lender did not set them up for success before escrow opens. Hey, what a great criteria to use to screen your prospective buyers and their representation before you accept an offer, right? What do I do to navigate this as a buyer? Step 1, set your expectations, of course. The purchase price is important. However, for most buyers, ensuring they are comfortable with the monthly cost of owning a particular home is the biggest financial factor driving their decision to move forward or to bow out. Don't worry, these premiums are not likely to bankrupt you, but understanding them will make you a more confident and empowered buyer and can even help you get your offer accepted. Step 2, work with a realtor who is one step ahead of these issues and who is experienced showing their own value as an agent partner and your value as a committed buyer to the sellers. Because sellers want 2 things from you, your money and peace of mind. You're welcome to pay as much money as you like, but wouldn't you rather win with peace of mind and keep that money in your pocket? Sure. Submitting an offer with an insurance quote signed by you showing that you are a game day ready buyer. Wow, as far as insurance goes, that is peace of mind, that is powerful, and it costs you $0. You know my approach in this business, guys. I'm an advocate and an advisor. Wherever you are in your journey, you've got a friend here looking out for you. Do not hesitate to reach out to me with your questions regarding insurance or any other real estate curiosities. Cheers.